Welcome to the panel on ending junk fees and combating predatory lending practices. Please welcome our moderator, Alphonso David, President and CEO of the Global Black Economic Forum. Please welcome Rodney Williams, co-founder of Solo Funds. Travis Holloway, co-founder and CEO of Solo Funds. And Dr. Topeka K. Sam. She is the co-founder and chief visionary officer of MyFresh.
Okay, so we're here to talk about ending junk fees and combating predatory lending practices. But before we get into the substance, I want to just make sure that the audience understand what you do specifically. So maybe we can start with you, Rodney, and Travis. Tell us, what is Solo Funds?
Solo is a community finance platform created to allow individuals who need access to capital to be able to get access to that capital in a non-predatory way, in a much more capital efficient way. So essentially, we're a marketplace that allows individuals to create their own loan terms to get access to capital under $600. So if you need a loan because your car broke down, you need a loan because you're short on rent, or you have a utility bill that needs to be paid, you're actually able to create your own loan terms, which is not possible in any other financial ecosystem. And an individual who has discretionary capital can deploy capital to you in effort to help you solve your short-term cash need, but actually be able to earn yield or a return by lending that capital. So it's a peer-to-peer, what we like to call consumer-to-consumer lending platform. And we're the fastest growing and the largest consumer-facing Black fintech ever.
Yeah, the only thing I would add is that we started a company based on the shared experience of our friends and family needing access to capital, needing things to keep the lights on, pay bills. And when we saw the market, we just didn't see anything that was equitable, that not just provided capital, but when you do have capital, it provided a way for you to grow that capital. One of the most important parts to community finance is not just the access, but when you do have capital, you can grow it. But that's Solo Funds.
So that's Solo Funds. So Dr. Topeka Sam, maybe you can tell us what MyFresh is.
Yeah, so MyFresh is a fintech platform and a digital bank. And what we do is we make sure that directly affected people, justice impacted people, have access to free FDIC insured checking accounts. They're insured up to $250,000. We also provide health insurance because we know the two things that people lack that they need before they leave prison and are in community are access to free banking and access to quality health care. And so we wanted to make sure that we came in and fulfilled that gap. Our business is ran, built, and by justice impacted people, myself being formerly incarcerated, my co-founders being formerly incarcerated. We saw a solution. And while there are many other banks out there, what we wanted to make sure was that we were building something that was helping remove the barriers that people who are incarcerated actually go through each and every day. So it's one less of the 44,000 barriers that people have to face in reentry.
So let's first set the stage, because people may be watching, people here in the audience may not know, what is junk fee? What is a junk fee? What is a predatory lending practice? So maybe, Rodney, you can address predatory lending practices generally, and then maybe, Travis, if you want to talk more specifically on what is a junk fee, that'll be helpful as a foundational framework for us to have this conversation.
Yeah, I think there's like two core components that we focus on when things are predatory. And one of them is when there may be a miscommunication in what you're ultimately going to pay, right? And I know Travis is going to dive into that a little bit deeper, but that's super important. But the other piece is how fees compound over time. So that's one of the things that will get you in a trap. When you think about something like a credit card, where only a very, very small percentage of people who use credit card actually pay them on time, what they're really paying is a combination of fees like late fees and annual fees that are accrued every single month and additionally being applied interest. That also leads to a negative action on a credit report. So all of a sudden, you had that flat tire as a single mom, you weren't able to get to work, and 1 month or 2 months start to significantly impact your credit over and over again. And that's the example of like a debt trap.
Yeah, so when you think about predatory lending, it's the things that tend to thrive and live in the communities that we tend to thrive and live in, right? It's the payday lender, it's the check cashing institution, it's the title loan, right? You know, when you need access to capital to pay for your car that broke down, you're actually going and you're actually putting up the title for your vehicle in order to get access to capital. And those types of institutions tend to be incredibly predatory. But when we think about things like junk fees, what we don't realize is that it's not just the cost of, you know, maybe there's a fee to get access to a loan, but you don't think about the subscription fees. You don't think about the, you know, the origination fees. You don't think about the transaction fees and all of the additional costs that are associated with you getting, you know, that loan. And when we think about like the concept of APR, those things are not considered with that APR calculation. So
I'm going to stop you. What is an APR? Because let's just make sure that folks know what APR is.
So it's an annual percentage rate. So ultimately, when you apply for any type of, you know, loan facility or a credit card, right? Your credit card every month has some type of APR associated, right? And that APR it tends to be higher if your credit score is lower. It tends to, and obviously the inverse. So, you know, with a loan facility, what people don't understand is that you're not only paying that APR, because APR can easily be gamed. APR doesn't consider the origination fees and the late fees and the transaction fees that are associated with that transaction. So you actually do not understand or know what you're really paying. And what we really want people to understand is we want actually the, you know, government, and we want regulators to actually consider the full cost in all of the fees associated with the transaction to make sure that people truly understand what their cost of capital is.
Okay, so now we understand what predatory lending practices are. We understand what junk fees are. Dr. Topeka, maybe you can talk about the impact that this has on people who have any connection to the criminal justice system, so people also understand these principles and how it applies to them.
Yeah, so, you know, when you're coming, actually, if you're justice impacted, so that's whether or not you've actually been incarcerated, like myself, or you have a loved one who's been incarcerated, you already have, you know, a million of things that you need to worry about. And so when people are trying to rebuild their lives or trying to take care of their family, often what happens is they end up using check cashing facilities. And actually, there are more check cashing facilities in our communities than there are McDonald's. And so when you think about that, I'm taking my check and I'm going to a check cashing facility, and I'm usually spending about 13% annual of every single check that is being cashed. So I'm losing money each year off of the money that I've already made, while also having to pay for my restitution if I have it based on my crime, or any other fines and fees, parole and probation, fees to just have an ankle monitor on. And then when you think about the disparities between women who are coming home from prison, you think about the things that they need to do just to get their children back. So for us, it was not only are we trying to think about what we need to do to make sure that people have access, true access and free access without having to worry about another barrier. We wanted to make sure that we're taking away those fines and fees and letting people put that money back in their pocket. We're making sure that people have access to free, truly free checking accounts. We're also making sure that people have quality health care. The health care that we provide allows for pre-existing conditions to be covered. It allows for mental health treatment to be covered. It allows for any type of substance misuse, inpatient and outpatient, to be covered. And if you make under $40,000 a year, which often people who are coming home from prison do, then it is totally free. And so, you know, when you think about these things, we're starting in our community. We say justice impacted because 1 in 3 Americans has had an incarcerated loved one, but we're also looking on how we're creating a solution that's helping to also end poverty.
So we have more check cashing facilities in our neighborhoods than McDonald's. Folks are going in to cash their checks on a Friday, and when they try to cash their checks, they're being charged just for cashing their checks high interest rates, or high fees, I should say. Rodney and Travis, I know you two have been talking about this issue, thinking about this issue for quite some time. In fact, I believe this past week, you released a report working with us on this specific issue of predatory lending practices.
Thank you so much.
And I think it's important for people to understand what that report is, why you issued the report, and what are you proposing we do to end predatory lending practices?
Well, number one, thank you for working on this report together. For us, we call it the Cash Poor Report. And as we started our company, it became so apparent that the group of Americans that were facing the issues of these predatory fees were much larger than we could ever imagine, where the average American was enduring these type of experiences. So when we looked at the research and data, we just couldn't find the correct stat. So what we commissioned is try to understand who are these Americans, their demographics, and what are they truly paying over time. And some of the results was fascinating. For example, 10% of Americans that are cash poor make over $100,000 a year. They're gainfully employed. They're college educated. Being cash poor doesn't mean that you're not adding to the economy. It means you have limited savings in your account. And when you do have limited savings in your account, and you try to assess certain financial services, or when inconsistencies happen in cash flow, or an emergency happens, these companies take advantage of that situation with the predatory fees. And that fees cause major problem. For example, the average person will spend about $1,900 subsidizing an unplanned expense. That completely removes the savings that a user has that they experience over time. So, number one, fascinating report. But I think that with the call to action that we have for Congress is that the APR is not an accurate cost. So as a consumer, and when I get into this experience and I look at that APR, I'm trying to assess value, and I can't. And then I can't understand how to avoid the trap, because the trap are the fees that are being hidden and not being discussed. And that's our call to action, is to think about total cost, not an APR.
The only thing that I would add is that, kind of to your point, what we realized when we were going through this report is that 5% of people who can't get access to the capital that they need actually resort to crime. And when you think about 5%, maybe that number sounds small, but there's over 300 million people in the United States, which means over 15 million people every year are committing crime because they don't have access to $400, right? And we tend to think that these problems are black and brown problems, but the reality is 80% of this country is living paycheck to paycheck. So the majority of people who look like us, but also look like many other different races and nationalities, are going through those same experiences. And when we realize that over 10% of the individuals who need access to our capitals, call it sub $600 loans, make over $100,000, you have to think about the fact that 34% of the country has $0 in savings. So more than a third of the country has no money for an unplanned expense. And that's challenging. And to take that to your point one more time is that I'm not sure if everyone here has ever seen the documentary on Kalief Browder, but Kalief Browder was in jail in Rikers Island, and what I realized was that over 90% of people sitting on Rikers Island in the jail in New York City are there because they cannot post bail of less than $1,000. Yeah. So that means that not only do they not have $1,000, nobody that they know, love, and care about has $1,000. And that's the reality of what we're living in America. And we like to say that we are actually the fastest growing emerging market, because why is 80% of our country living paycheck to paycheck?
And that is such a great point, because it has me think about even when I started my journey incarcerated, and there were women who had been sitting there sometimes up to a year who could not pay $1,000 bail. And when you have $1,000 bail, typically you only need $100, right? If you can get a bail bondsman. And I would have my friends actually pay the bails of people so they can get out of prison, just because I knew that they would spend that on a Friday night going to eat, right? And so when you think about the criminalization that's also happening within our legal system because of people who are cash poor, I think that was an incredible point, and I encourage everyone to also read this report, because it is critical for us to understand money, how money works, to get comfortable with money within our community, because without these resources, we're never going to be able to get from under the foot of poverty and into true wealth building.
Okay, so I'm living paycheck to paycheck. I'm returning back into society. I'm paying high fees when I try to cash a check. For all of the people that are watching, what do you want them to do? You mentioned a call to action. And for all of these panels, what I've said is we want to make sure we're providing information to people, but we also want to make sure that we're guiding them to what we think is most useful for them to do. Yeah. So in our remaining minutes, if we can just go around and talk about what you think people should do. What are the alternatives? Because the cash, all of the facilities you just mentioned, more of these cash checking facilities that exist in our neighborhoods than McDonald's exist. Yeah. So if I'm living paycheck to paycheck, what are my alternatives? What do you want me to do? How can I avoid these predatory lending practices?
Yeah, I mean, the first thing you can do is try to avoid the fees. And not to pitch solo funds, assess your options and try to avoid the trap. I will say, the reason why solo funds exist is so that you can access capital up to $600 when you do have emergency, and you can transparently select what you want to pay. That is our business model. We allow our users to optionally select what they want to pay. So the transparency is there. I would tell you the second thing is, at some point in time, you will get a footing in the ground, and you will have some savings. Maybe it's a few $100s, maybe it's a few $1,000. The best thing you can do at that point in time is to figure out how to save it and grow it, create yield. How do you create yield when you only have a few $1,000s? Come back to solo funds. Lending on our platform allows you to make tips every 2 weeks for helping a person just like you. Those tips can accrue over time, and you can annually make well over 20%. Put that in perspective. You have $2,000 in your bank account, and you lend on solo. At the end of the year, you can accrue an additional $400. That can pay for Christmas. That's the power of growing and accessing capital when you need it.
Dr. Topeka?
Well, I'm going to take $2,000 and give it to Solo so that I can make $400 at the end of the year. Or maybe I'll give a few more thousand. That's a high yield. But what I am going to pitch and tell everyone to go to myfresh, MYFRSH, noe.com. You can also download the app, and you can open your free checking account. What we require is, your social security number, ID, those things. We don't require a photo ID because we also know how hard it is for people who have convictions to even get their ID when they come out of prison. And take advantage of our healthcare platform also, so that way, if you have Medicaid, it's fine, but in order to go through our insurance, you have a better network of providers that can also provide you with great service. And I shared earlier the additional coverages that it has, and we are also able to provide this insurance in all 50 states across the country. So please join our platform as we continue to build out. Outside of just doing the checking accounts and the healthcare, we will be partnering with companies like Solo Funds to be able to create a marketplace of resources and rewards for people who are justice impacted.
Thank you for joining us. Rodney Williams, co-founder of Solo Funds, Travis Holloway, co-founder and CEO of Solo Funds, and Dr. Topeka Sam, who is the founder of MyFresh. Thank you for joining us. Thank you for thinking about this issue that affects so many people in our communities, because all of you know, on a Friday at 4 or 5 o'clock, you can drive by many of these cash-serving facilities, and you can see the lines out the door. People trying to cash their checks. And when they try to cash their checks, their money is being taken away from them. So please take advantage of Solo Funds. Please take advantage of MyFresh. And we hopefully can end predatory lending practices. What we didn't talk about is take a look at the report, because there are policy recommendations that Solo Funds is advancing. We need legislation, both on the federal and the state level, to end predatory lending practices. These practices are legal. That's what we don't talk about. In many states around the country, they are allowed to charge these high interest rates. And so we have to end that. And the only way we can end that is both with education and legislation. Thank you again for joining us.
Thank you.
Thank you.
Thank you.